Hi everyone, welcome to Go Local Live. I'm Go Local News Editor Kate Nagel. Thanks for tuning in this Wednesday afternoon. Big news of the day, Federal Reserve announcing its third consecutive rate cut. And now we have John Kuczmarski with Efficient Capital Strategies to come in, tell us a little bit about what this exactly means. John, thank you for joining us today.
Thanks, Kate. Thanks for having me. Today, yes, as Kate alluded to, we had our third rate cut, the opposite of 2019 today. First off, I just want to give a quick disclaimer. This is not investment advice. I'm here to recap what's happened in the past. If you hear anything that seems actionable to you or something you would like to act on an investment standpoint, please consult with an investment professional. It's very important that they understand your situation before they take any action.
Okay.
Thank you very much, Kate. Now to get on to the point, Kate made, we had a rate cut today. It was expected, like 97% probability. So the Fed's been very clear, indicating what they want to do. Today was kind of like what happens after 2 o'clock, and then Jay Powell had a 50-minute press conference like he normally does. He's doing a very good job of spelling out why he's acting. And a lot of this rate hike's kind of been named, this one's particularly, as the insurance cut. Insurance cut.
Okay.
And it stems back to the late 90s where Greenspan used the same term. And I feel like, we'll get into the reasons. Jay Powell gave 3 reasons why he's cut rates in 2019. The first being a slowdown in the global picture. That's basically, that's why they've been adding accommodation. The second was kind of funny. He mentioned trade policy today, which was kind of like a little bit of a subtle way of like pointing it towards the White House a little bit, And the third happened to do with inflation being below the 2% target. And if there was one theme of today's press conference, inflation was mentioned like over 100 times by Chair Powell. The Fed sets this 2% inflation goal. Currently, we're at 1.5%. So, that's justifying them acting. Rates went up since 2015 9 times, 25 basis points every single time. And in the last 6 months, they've come down, 3 times at 75 basis points. So.
Okay, so what, as you said, there was that 97% probability that there would in fact be a cut today. So with this expected, what now?
That's a really good question. That was the question of today. I mean, absolutely. Everyone, it was well telegraphed that rates were going to be cut today. We're at 175 to 150 range in rates. Now, what happened today, the good tidbits happened after 2 o'clock today. And there were a couple of things that, were, very positive. One, Jay Powell, made a statement about he no longer sees the risk of Brexit and from China phase 1 trade policy as an issue, as an impediment, and I found that to be really constructive. Hearing it from him, he has a lot of credibility. There's a couple other things. They started mentioning, possibly reviewing an inflation targeting policy in the middle of 2020.
Okay.
A lot of countries have had that. We've never used that in the United States, and they kind of just dropped some breadcrumbs on that.
Now, why looking at that?
Well, they want to have inflation exactly at 2%. So if it's at 1.5, and I actually believe 1.5 inflation is really not as bad as it could, as the Fed is making it out. But, there was one prevalent theme about today. The Fed is more worried about lower inflation than higher inflation. So that's why, and look, I think 2019, give credit where credit's due. Jay Powell, was on top of it. There was a slowdown in business investment and manufacturing, happened over the course of the year, and the Fed in lockstep had been lowering interest rates with it. I don't think the Fed, and Jay Powell said this today, this was done for insurance reasons. Generally, the Fed does not like to act in an election year. So, I think this is, I think this may be, where the Fed stops cutting rates. But, look, he left himself lots of flexibility, really good poker face. I mean, he was, really, and look, and I think it's just because it's his genuine belief that he's going to act either way, and regardless of like pressure from the White House. You know, he just kind of ignores it, and I think he's doing a great job. I think, you know, markets have responded really positively to his actions. We're at all-time highs in the S&P 500. So, you know, I think Jay Powell's done a great job.
So let's talk a little bit, you referenced, of course, looking back at an insurance cut being utilized under a Greenspan Fed. Historically, I mean, does it work?
Well, you know, in the late 90s, after the insurance cut, the Fed went back to resuming rates pretty quickly. So, you know, so look, and even Jay Powell today, he was so clear about it. He was like, look, once inflation's over 2% and rising, that's when we're raising rates again. I mean, he was just like as straight shooter as it could be. You know, and his Fed has been like that. He's been very transparent. He's done a good job. You know, I know it's, you know, the president takes a lot of shots at him, but, you know, today it was a little like, it was a little nice to see him take a shot back, you know.
Have we heard any response from the administration to that?
No.
Yeah. Do you expect we will?
And it was a very subtle one. It wasn't, you know, he tries not to be political in any way, shape, or form, or respond to any question that Trump or any like political statement, any political figure makes a statement, the Fed will not respond.
Okay.
But you know, it was kind of funny today when he said that trade policy kind of impacted us over the last 18 months. And look, you know, short term the benefits, it's been a lot of pain, but you know, maybe down the road it's maybe long term genius, maybe not. You know, we'll be fair about it. You know, but yeah, there's been a lot of short term pain and Powell's kind of taking his victory lap, you know, for cleaning up the mess a little bit. And I mean, but you know, he's a great public servant. You know, he's doing a great job. I'm happy for him.
Well, you know, as we always do, appreciate your coming in here to sort of break things down for the viewer. You know, when you see the headlines, what exactly it means. Anything else you want to share with viewers while we have you in here?
You know, I mean, look, markets are all-time highs. You know, a lot of analysts and, you know, economists were kind of painting a more gloomer picture than we're getting. We're getting a lot of corporate earnings. Actually, Apple's coming out like right now, and a couple other companies like Amazon, Alphabet, which we know is Google. They're like, you know, my grades in college, like B minus, C plus, you know, like kind of in that range. You know, so it gets the job done, but you know, it's not like exceptional.
Well, I appreciate you taking the time to come in. Again, the third consecutive rate cut announced by the Fed today. And John Kuczmarski with Efficient Capital Strategies breaking down what it means. So I appreciate you taking the time to come in. Thank you very much.
Thanks for having me.
And thank you for watching today. We're going to be back with more Go Local Live tomorrow. So when you see us pop back up, come on and say hi. In the meantime, find us on Facebook and see us on GoLocalProb.com throughout the evening. We'll see you back here tomorrow. I'm Go Local News Editor Kate Nagel.